Hi, welcome to Wise Beyond Bitcoin, your home for the crypto neo news, education, and opportunities, and your home for the macro updates. My name is Ryan.
My name is Lucas. And as you know, we love to bring you the latest and greatest what's going on with the macro economy and how it will impact the crypto markets and how we can look at the future of where the markets are going. This is a theme that we've been covering for a long time. So let's get right into it. What's the story here with how the markets reacted to the inflation data? And is this good news becomes bad news becomes good news? What's happening here? The
Yeah,
prices are dumping, they're coming back.
yeah, it's like a whipsaw. We don't, we don't know what's happening here. Well, let's kind of walk through the story and see if we can figure it out. So today we got the inflation data from the from the BLS, Bureau of Labor Statistics. The expectation was actually a lot lower than what the actual numbers were. So on core CPI, which is stripping out the volatile categories of food and energy, the expectation was a 0.4 increase, but the actual number was 0.6. And then the more broadly looking, the more broad measurement is of the CPI, the total, basket. It was expected to be zero point 0.2, and it ended up being double that at 0.4. So the story here is that the expectation was much lower than what reality was. Inflation continues to be a problem. You can look at the categories and see that most things are not getting better. Food continues to be a problem, getting worse, or staying the same roughly at home and away from home. Energy, the declines are less than the month before. So we are seeing energy prices come down, but that decrease is slowing, right? And with OPEC announcing recently that they're going to cut production, we could expect that energy is going to continue, in the near future start adding to these inflation statistics instead
Right,
of
because a lot of
subtracting.
that deflationary and energy was not because of, well, I said lack of inflation pressures, but more of it was lack of demand. We saw a major drop in demand
From
in
the high
some energy
prices.
sectors.
Yeah, yeah.
Right.
I think you
So
could
we'll see
say
that.
it's kind of like with, prices tend to go up and they go down as a response. People react and they trade in the opposite direction. These decreases in energy are really in themselves only can be understood as coming after such massive increases in the price of energy. So it kind of had to come down, and so we're seeing that now. But and then further on, generally speaking, things are just continuing to be expensive. I mean, if you look from August to September, these numbers aren't really falling. In some cases, they're getting worse. They're either holding constant or getting worse. So all in all, energy is really the only standout. Everything else is going up, and inflation is continuing to be a problem. So what does that mean? Means Fed's probably going to continue to hike rates at a similar
So
rate.
would you say that the major sell-off when the markets started to kind of tank, that was because obviously the big news that the inflation data came out, it was worse than expected. And
Yep.
so a response to the inflation being the actual inflation being higher than the expected inflation, we
Right.
saw a response by saying, uh-oh, the Fed's going to raise rates. They're going to have to
Yes.
respond with higher interest rates, which is going to have a negative impact on the market, and therefore we saw the sell-up. So that was the initial reaction yesterday, right?
Well, that was really this morning.
Early
Yesterday
this,
we kind of had, yeah, it was this morning. We got the bad news about the PPI yesterday. That was kind of told us that we were going to have bad news this morning. So everybody was kind of had their fingers on the button, really. Got the news at 8 roughly this morning, and immediately you see, a sell-off happen across markets. Dow, S&P, the Nasdaq. They all mirror each other. Even gold. The gold is seeing the same drop, and then. But the interesting thing is that after this drop, shortly
Mhm.
thereafter, you have some real dip buying activity, right? And in many cases, like the Dow, the rally after the correction actually pushed higher than where we were at even before the initial sell off. So there's some curious, puzzling behavior in the market price of these indexes because of the fact that we're all looking at the bad news with inflation, which means that the Fed's going to be able to continue to hike rates. They're not going to be pivoting in November when they have their meeting next, and that we should probably anticipate another 0.75 rate hike. So yeah, it's an open question, really, why this rally happened to the extent. Now, I think it makes sense why there was some buying the dip, right? Because you obviously trade, you want to trade a strong move up or down. You can bet that there's going to be reversal and make some short-term profit. But why push it all the way up? Now, I think we have a half of an answer to that, but not fully. It's still a puzzle, right?
Let's get into that. So we were talking about this, and why does this matter? Well, why we like to share this is because the markets are heavily correlated. And so if you're looking at when to enter into blockchain or crypto and support different projects, understanding how the whole market, the economy at large is doing, will help you make those better decisions. And this is a theme that we've been covering for over a year now, pretty much since the beginning of the decline from the Fed's announcements. And so now here we are, and we've been tracking along. And if you've been following us, you've been tracking it with us. And where we're at now is, okay, so where are the expectations between the banks and the traditional markets? What are these numbers? Although it came out that obviously the inflation was worse than expected, what other activity is going on behind the scenes that would bring about confidence for this to be purchased back up? What we know that the Fed is selling off its balance sheet. We know that that's also more of, I would say,
kind of a hidden factor, right?
A hidden factor that we've been covering that would have a negative impact. Well, it would increase interest rates and would slow the economy down by taking money, liquidity, directly out of the economy. So knowing these factors are continuing to steer us towards a recession, depression in that regard for, it looks like, for several months to another year now, based upon the policymakers. Why now? What's to cause when the inflation data comes out worse than expected? We would expect to sell off like we initially saw, but what would be the reason for it to jump back up to where it was, and then in many cases higher? And I don't have the answer to that right now. We talked about, and I have an answer. I want you to tell everybody what we've come to at the moment with the information that we have. And it seems like it could be what?
It could be price reflexivity,
Yeah.
which is just a kind of the inverse of what your intuition is with prices in terms of supply and demand, where price goes up, demand falls, or right, price, the inverse of that would be prices fall, demand rises. And that's kind of how you get an equilibrium in markets, and price reflexivity is actually the opposite. It's how disequilibrium in markets happens. And it's the kind of the mirror image of what that equilibrium story is. And the price reflexivity story is basically real simple. It comes down to the idea that you have some people who bought the dip, and then maybe in the next 20, 30 minutes made a healthy profit, 2, 3%. And then other people on the sidelines are saying, wow, look at this rally happening, on this price. And so they buy in too. They don't want to be left out. You get that FOMO kind of thing happening. And so then you push the price even up further, and then that percentage that those people are making at the early on, that gets even larger. And so then other people are like, wow, this trade is really making money for people. We need to get on it. And so you get this bandwagon effect and FOMO. And so the price, basically the way to think of it is, it's a price increase can change people's kind of like triggers their greed instincts, and they pour into it, chase that trend, and they drive that price even further. So instead of prices having a natural correction to revert, you have the opposite, where psychology takes over and they actually go the opposite direction. And you get what's like a disequilibrium outcome, where prices become disconnected from maybe some underlying fundamentals. And I think it's a very short-term deal, but this price reflexivity thing is it's a very big part of understanding how crypto works, and why certain projects, put in 100x returns over a short period of time. And it's largely because of all the money they make for people, and that triggers other people to kind of bandwagon on, and it just pushes it even further, and the narrative just gets stronger and stronger and stronger, and you just get these parabolic runs that have very little legs long term, but in the short term, you know, people make some money.
I want to mention one more thing that separates crypto, the crypto markets from traditional markets, but then bring it all back together. So obviously the crypto markets are a lot thinner. There's not as much money in blockchain and crypto. And there are order books and people sitting on the sides looking to buy the dips in this
Right.
up and coming technology. We're seeing more commercials, more advertisements for institutional investment companies buying into blockchain and crypto. So regardless of market conditions, regulation is continuing to bring more clarity, and blockchain continues to develop. It's not the end of this technology sector, it's just the beginning. It makes sense that on a quick dip, you've got people on the sidelines with order books ready to buy it back up. And then of course, with the rest, looking at how the rest of the market is returning, you can see that reflexivity, that FOMO kicking in even more. We'll continue to keep people updated because it's very curious. We're here right now watching it happen, this rebound in one day. And it's very curious because we don't know actually right now why it is returning so strong, because the reality is, based upon the inflation numbers and based upon the expectations of what the Fed is going to do, we should be seeing a continued drop in prices, or at least you know, kind of crab walk sideways and maybe a little bit bump. So it'd be interesting to find out, and we'll obviously do a video update when we do find out more. But I would say that
also share your thoughts, you know, if you have anything to add as to what's going on that maybe would help explain this rebound and something we missed, by all means, you know, share it. We'll talk about it.
I would say it definitely feels like what do they call a dead cat bounce, or a very short term, this reflexivity FOMO. It'll hit a point where people recognize, well, okay, that's fine, but we're still dealing with higher than expected inflation, and the Fed's still going to have to raise rates, and we're still dealing with the economy. And that's why we like to bring you this content and talk about the macroeconomic you know, conditions. And because in the short run, they say markets are irrational. In the short run, it's very difficult to find out which variables are present and what effects they have. So the best we can do is, you know, share what we understand as we see it, but keep that open mind to what else is going out there and continue to share that with you as we understand it too. So you know what to do if you like learning about macro updates, blockchain and crypto. We've got playlists. Subscribe, hit the notification bell, hit the like button if you like knowing what's going on in the economy and crypto. And look forward to our next video because we've got more coming and more Fed updates. So I think we've got some crypto videos too. If you want to get into crypto, we can walk you through it. But I think we covered the most of this update with what's going on in the market.
For sure. So until next time, adios.
Have a beautiful day. Namaste, y'all.